Hello, traders. Cousin Benny coming to you from theclosingprint.com, Sunday, the 10th of December, with your weekend video newsletter. In this edition, we'll talk about the calls that were bought towards the end of the week and how that is creating an environment where dips are more likely to be bought, and the call walls being breached on the upside, with the S&P cash closing above 4,600. That said, let's get to the charts. Thanks to Brett over at Spot Gamma providing this chart to members. We can see that price action closed above the 4,600 strike, where most of the gamma is located, both puts and calls, with price action closing right up against that 4,600 and previous July pivot high. We're now at 52-week highs with 3 weeks of trading left this year. RSI turned back up towards 70 with price action surging. Stochastic also turned and MACD is flattening out near the zero line. In addition, the S&P Equal Weight Index, which excludes these 15 stocks on the left that make up more than 32% of the weight, the importance here being we're closing right up against this pivot high that we saw back in late August, with potential for us to rise up to previous highs and stay in this range by year end. However, we do have the number of stocks above the 50-day in the red zone. That did turn up, so that is a good development, along with the number of stocks above the 200-day in the lower panel, together giving us a reason to believe price could stay in this area or surge a bit higher, considering all the moving averages are turning back up, together with breadth on the S&P 500, mid caps, small caps, and NASDAQ in the lower panel, along with the New York Stock Exchange Composite, which has 2,000 stocks, a broader measure of market participation, surging back above the zero line for the last 4 or 5 weeks, along with the New York Stock Exchange Advanced Decline above its 200-period moving average, with price action pausing, telling us that the bulls and the bears are at loggerheads to start the week. As you know, we've favored small caps in recent weeks as the relative strength pushes price action back in the upper half of this range that's held since 2022. At the same time, these 10 New York FANG index components, with the bulls potentially testing the highs, succeeding if those 10 stocks catch a bid, with all but 2 closing green on the week, with individual swing trades closing very strong on stocks like Meta from the group, on decent and above average volume, stochastics turning at a prime area where we would look for MACD and stochastic signaling a test of the 342, 343 zone in the short term, in addition to Apple testing 52-week highs on above average volume, Amazon closing just below the high as well, with Broadcom beating expectations, with earnings growing at a modest 4% year over year, and growth in earnings of 13.4%, in addition to semiconductors being one of the strongest sectors to end the week, bouncing off of its bullish 9/21-day zone all of last week, ending near 162.50 at the close. And despite Google's reluctance to break higher above that quadruple top, the communications sector, of which Google is a part, did manage to push higher on Thursday and Friday, back above its 21-day moving average, suggesting that we could see some follow-through with MACD and stochastics turning. From a prime area with respect to stochastic, MACD is turning as well, volume picking up, and RSI is rising. The bottom line here, the S&P 1500, small caps, mid caps, and large caps, 1,500 of the most significant U.S. companies, giving us a bullish signal to end the week. That said, we'll be looking for institutions to give us direction on Monday and Tuesday. Starting off on Monday, we did close just above the 200-day with RSI near oversold and stochastics and MACD potentially turning, similar to what we saw in late 2022 in December, where price action did come back up and test the 50-day. So there is potential for the 10-year to bounce. That would be a headwind for equities if that were to occur. If we do move lower, that would be bullish for equities. Conversely, the 20-year bond TLT has been bullish for the last 6 weeks, pushing back up to this range that we were occupying to begin the year, right around 102.50, with RSI rising, suggesting if we do see weakness in yields, bonds should continue higher, together with the US dollar, which has been hovering right above the 200-day moving average last week. And as we've seen in the past, whenever we have these uptrends in RSI, price action tends to move higher. That would be a headwind for equities to start Monday trading. At the same time, we've had commodities pulling back. This is the Deutsche Bank Commodity Index Tracking Fund near the midsummer lows, with gold bulls getting trapped with price action reversing briskly with the strength in the US dollar last week, along with price action in silver pulling back into the midpoint of this range, with a significant decline in crude oil over the last 12 weeks, giving consumers more dollars to spend on the holidays rather than on gasoline for the next couple of weeks. Once again, sectors in the small cap arena are bullish with the exception of energy. 8 of 9 are above their bullish 20-day moving average, and 50-day is turning. That's bullish for small caps and the IWM. With S&P spider sectors also bullish. Biotechs with the 20-day crossing the 50-day midweek. That looks strong. Real estate looks strong. Transports look strong. It's just energy, oil and gas equipment that are weak. The rest of these look very strong, potentially giving us a follow-through as we test that 4,600 level on the S&P 500 cash. And with most sectors either bullish or consolidating, we do have a bullish signal on the consumer discretionary versus consumer staples. You can see back in 2022, when the bear market started, institutions started positioning more defensively, and then discretionary underperformed consumer staples. The beginning of 2023, when the bull market started, we can see the opposite. Consumer discretionary, things that people don't need, started to see positioning by institutions. That gave us a bullish signal. And currently, we look nothing like 2022, with price action continuing to surge. No hint of a peak just yet, giving us a bullish signal going into this week. Once again, we'll have you watching the IBD 50 list set up with stochastics RSI, giving us more bullish signals. In addition, over the last several weeks, I've told you that the number of stocks on IBD's rising profit estimates scan continues to be populated by over 200 companies per week, indicating their earnings are increasing going into the next quarter and next year. With the significance being companies are reporting better earnings than what the financial media has been trying to drum into our collective mindsets, with companies hiring, but maybe at a slower pace, Prior to the opening bell on Friday, of course, we had non-farm payrolls, which came in a little stronger than expected, with the participation rate up slightly. Non-farm payrolls came in at 199,000 versus 180K forecast. Despite that, we had a little dip early in the morning in the pre-market and then gradually rose throughout the day, dipping again into the noon hour and then following through to close above the 4,600 call wall, leaving the bears scratching their heads. That left many of these IBD 50 stocks following through on the day, with Carnival Cruise Lines, Royal Caribbean, and Norwegian Cruise Lines all giving us bullish continuation patterns. Retail stocks were strong. Technology, semiconductors were strong. DraftKings giving us an oversold signal, looking for that to follow through this week. Lululemon beat expectations, reporting on Friday as well. Earnings growing at 28.5%. Revenue growth at 18.7% year over year. They beat expectations by 8.58%, with the stock surging to new 52-week highs on well above average volume, about 5 times normal, suggesting earnings for the retail sector is better than expected. With Gap stores reporting earnings 3 weeks ago, continues that trend higher. Look at the muscle, showing the strength of trend, volume above average, with Dick's Sporting Goods creating a nice cup and handle pattern. If this starts to break out, look for a push above 150. With RSI showing strength of trend, stochastics embedded above 80, and MACD trending above its signal line. As previously discussed, Microsoft also held on to the 21-day moving average. It's on the IBD 50 this week, looking for a follow-through. RSI is above 50 and pushing higher. Volume was above average on Thursday. We're looking for a surge in volume, with stochastics potentially turning this week, with additional FANG stocks like Meta giving us bullish signal on Thursday, Friday. RSI rising, showing strength of trend on above average volume. Stochastics in a prime area, looking for a turn like it was back in late October, which led to a multi-week rally. Can we rally into year end? So far, so good, with Meta, Apple, again testing 52-week highs on above average volume. Stochastics turning back up, MACD above its signal line, and RSI near 70. Tesla, while it is captive to these moving averages, look at the volume. This suggests that we might see a follow through this week and a pop, testing 52-week highs, maybe by the end of the year. While additional stocks from the security industry group continue to show a trend, we have 6 weeks up. Qualsys, Palo Alto Networks breaking to 52-week highs, RSI showing strength of trend. Zscaler trying to break out, along with CrowdStrike trending. Look at the volume. That's institutions pushing this to 52-week highs. RSI showing muscle or strength of trend is improving, not deteriorating or diverging, with semiconductors showing strength. MACD stochastics set up prime area for a turn. We did see strength in AMD last week, as well as NVIDIA on Friday. AMD pop into new highs. NVIDIA looking strong off the 50-day moving average, closing back above the 9 and 21-day. RSI above 50. MACD turning from a prime area again. Look for NVIDIA to test the highs. With tech showing strength, XLK, stochastics turning at 50, RSI heading back towards 70. With the Dow Jones Software Index also above its very bullish 9 and 21-day. Volume looks good. Stochastic, MACD trying to turn. RSI is moving higher. Cloud computing stocks in this ETF showing a bullish cup and handle pattern, looking for a breakout. Tech stocks like Snowflake also continuing higher. We have a credit spread on this one, the 170, 160 for January 19th expiration. With the XLY consumer discretionary stocks trending as well, volume shows institutions have been buying for the last 6 to 7 weeks. This continues to thrust higher. Whenever consumer discretionary is outperforming, that's a bullish signal. Relative to its defensive sectors, XLU, XLV, XLP. That said, biotechs are also looking very strong, looking for a follow through. And finally, the financials. If the markets are going to move higher, we desperately need the financials to continue as well. With the money center banks like JP Morgan following through, looks like it's going to break out of what looks like a cup, no handle per se. RSI showing strength, volume shows institutions have been buying shares, and stochastics is near 80. Goldman Sachs, volume over the last 2 weeks, you can see that this is about to test the 52-week highs at 355.71. Looks pretty strong. Stochastics turned up, MACD's turned, and RSI is near 70. And Wells Fargo, which we have a position in for the last several weeks. Wells Fargo has continued higher. Look at the volume over the last 3 weeks as it tests 52-week highs. RSI showing muscle. Now, all things considered, the markets are near resistance at 4,600 S&P cash. So we need to start off the week with a bit of caution. Looking for a follow-through, that's great too. But don't get overzealous. Let's see what the institutions have to say to start the week. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com on Sunday, the 10th of December, with your weekend video newsletter. I will send out a watch list around 12 midnight on the East Coast, around 9 o'clock on the West Coast, so be sure to check your inbox for that. Otherwise, enjoy the rest of your weekend. Take care, and we'll see you in the morning. Ciao.